For about 2 decades between 1955 and 1975, the world witnessed the United States and the then Soviet Union invest enormous amounts of money and talent and enable whatever policy necessary to win the so-called space race, to put man on the moon. And the impact of this race led to many new technologies and systems and even approaches to economic development, and many that we still use today. Today, the world is witnessing a different kind of race, a clean energy race. Investors are looking for places to put their dollars into low carbon and net zero projects, and countries are doing everything that they can to attract that investment. Canada and, well, Alberta are no different, and we have a bit of a superpower. Welcome to a special series of The Brief called Advancing Missions and Moonshots. I am your host, Brittany Brander, and in this series, I talk to leading experts, business leaders, innovators, and thought leaders across Alberta and Canada and explore solutions to the world's biggest challenges in energy, agriculture, and health. Today, I am joined by Adam Sweet, the Western Canadian Director at Clean Prosperity, to discuss the changing global investment landscape and how Alberta can use its superpower, you may know it as TIER, to not just play the clean energy game, but to win. Welcome to the show, Adam. I'm very excited to talk to you about TIER and ways we can make it better to build Alberta into this place where we can compete in emissions reduction projects and decarbonization. But before we get into the meat of our conversation, can you just tell our listeners a little bit more about you and what you do at Clean Prosperity?
Yes, thanks so much for having me, Brittany. It's a pleasure to be on. I've been a big fan of the Business Council of Alberta for a long time, and follow your work. So it's been a lot of fun to work together on this project, and I'm really happy to be here. So I'm the director for Western Canada for Clean Prosperity. We are a Canadian climate policy organization that does work on low carbon economic growth and emissions reduction, particularly in an approach of how does Alberta and Canada reach kind of our goals, our net zero goals. We really are at a core focus on kind of free enterprise solutions. So what kind of policies can we set up that enable free enterprise to be able to make the decisions that are most efficient for them to be able to achieve those emissions reductions, and by doing so, create new opportunities and jobs in the low carbon sector. Really is where we kind of focus. I'm born and raised in Alberta. Moved away for a little while, but moved back here about 10 years ago to before all the Alberta ads. I moved back to raise a family, and I just love this province and I love my home. So I wanted to come back and be part of hopefully making it better.
So in our conversation today, there's I think 2 key questions that I really want to tackle. Number one, as Alberta embraces a low carbon economy, what does the investment landscape look like?
Mm-hmm.
And how has the game changed with the introduction of the Inflation Reduction Act in 2022, I believe?
Mm-hmm.
And the second question is, how can Alberta leverage itself to not only play the game, but win? Let's start with the macro. When you look at the global landscape for decarbonization, low carbon emissions reduction projects, what have you observed? What has changed over the years?
What's really changed has been an acceleration, particularly since the Inflation Reduction Act came to the fore. We've seen there is a generational level clean energy arms race going on right now, in which investors are making decisions of where to set up low carbon projects such as hydrogen, ammonia, etc. And they're making those decisions now. And when they set those up, not unlike in the traditional energy sector, once those are set up, that kind of dictates that really dictates supply chains and also the speed at which those things can be built in terms of the order that they're getting done. And so we're in this race right now where Alberta is incredibly well positioned. We have a really strong start, and we have an opportunity to become a diversified energy powerhouse in which we continue to advance our traditional oil and gas sector, particularly for thermal use, but we can also expand it into how do we use that in terms of the chemical value of those products? How do we use them to create new products? How do we develop our renewable sector? How do we develop bitumen beyond combustion, for example? And we're in a place right now where the world is really moving quickly in this space. We still, like I said, traditional energy demand continues to grow, and any of the demand destruction pathways that are forecast are still a number of years out. But the key thing is that the amount of investment in the low carbon space right now is incredibly fast, and it is if we don't catch it now, we're going to regret it, because we'll be behind the 8 ball, for at least the next generation.
Yeah, absolutely. Can you talk to me a little bit more about the Inflation Reduction Act and how that specifically has changed into the global competition for investment? It's come up many times in some of our internal conversations. How has that particular piece of legislation impacted how Alberta and how Canada, how has that changed the game for us?
The Inflation Reduction Act has supercharged this sector, and almost in the way that we used to talk about the giant sucking sound of the oil sands, right? When the rapid capital development was taking place, everything was being pulled there. Labor, all this labor, supplies, everything was all the investment, infrastructure funding, everything was being pulled towards that space. The same thing is now happening in the United States with the Inflation Reduction Act. The size of the supports, the range of the supports for low carbon investments are incredibly large, and it has made it such that the rest of the world is having to move very quickly to try to compete with the United States. And in Alberta and in Canada, our treasury is just not the same size. So we're having to come up with unique ways to be able to maintain that competitiveness, to ensure that that investment continues to take place here in Alberta, where we have many natural advantages. But when we're starting to make those questions about final investment decisions and the size of kind of the funds that you can get in the United States, it makes it incredibly difficult. The way that we would describe it, in terms of how things are going, is that in Canada, we essentially the various programs that have happened federally are the equivalent of you book a flight with an airline, and you might potentially get upgraded. You're not sure. Whereas in the United States, everybody's going in business class right off the bat and being sent directly to the plane. And the speed at which they've been doing that has actually led to the point where that plane is actually pretty much pulled away from the jetway and about to take off, and we're still trying to assign seats here in Canada right now. So that the speed, the size, the range and scope of the supports in the United States have really made it a challenge from a competitiveness standpoint. And so that's why we need to move quickly and decisively in Alberta around how we unlock our low carbon potential.
So if we can't compete from an incentive perspective or from a finance perspective, perhaps we can compete on a policy perspective. And something that you've noted in the Missions and Moonshots paper that you've written for us is that the tier is a very unique asset to Alberta that could potentially be the platform or the thing that we can leverage to actually compete in this space, to maybe start assigning those seats faster and getting on the plane faster. Can you talk a little bit more about this program and why it's so important and why you see so much opportunity there?
Certainly. The Technology Innovation and Emissions Reduction, or TIER regulation, is Alberta's industrial carbon price. And it's backed up by the federal output-based pricing system, or OBPS, but really actually started back in 2007 when Alberta was the first jurisdiction in North America to introduce carbon pricing for industry. So this is something that we've been doing for a very long time in Alberta. We know it incredibly well. Industry understands it very well. And it's a unique asset for us. It has created a carbon market that no other province or territory in terms of size has it has nothing like it. And it's really been core to how Alberta has been able to decarbonize and attract a lot of that low carbon investment. And the reason is that when these facilities that are part of tier essentially, does better in terms of their decarbonization or their emissions reductions, they generate things that are called carbon credits. And these carbon credits then trade on the market. They can sell it to somebody else who has to decide whether they'll pay a price because their emissions haven't reduced, or they'll buy a credit. And these carbon credits trade on the market. And essentially, they create a source of revenue for those companies or facilities that generate them, right? And they get a chance to sell them. And so because it's a market based, and back to us being supporters of the free enterprise solutions, because it's a market based, the price naturally fluctuates. Now, it does have a trend line upwards, because the carbon price will be increasing up to $170 per ton in 2030, and so the value of those credits will likely increase as well. And so why this actually it helps us in terms of competitiveness is that those carbon credits are a source of revenue that, if you can create certainty behind them, are actually really important in terms of project financing, and are key to helping us compete with the Inflation Reduction Act. And we've come up with a couple different ideas, a key one being around what's called a carbon contract for difference, which we didn't come up with. It's been around for a while. It actually exists in other countries, but come up with kind of ways to have that in force here in Alberta, and to use the tier system to guarantee the value of those credits, thereby guaranteeing some potential revenue going forward, and allowing us to compete with the Inflation Reduction Act.
Yeah, you brought up one of the key challenges with tier is that it works when there's certainty. And that's one of the challenges that you brought up in the paper, is that the uncertainty, it's not great for investors. Investors want certainty. So can you talk to me a little bit more about that piece? Why are you concerned about the uncertainty potential in tier?
There are really two aspects to that. The first is on the front end, when a company is looking to make a final investment decision, or FID, and they are trying to make a decision about, okay, if I'm setting up in the States, I get a guarantee. So back to that example of business class ticket, they know that in the States they're going to get a certain amount, whether it's through 45Q or V, depending on their various projects. They will get a certain amount back into production tax credit. When they're looking at the Alberta situation, because those credits can fluctuate, that's not certain revenue, or sorry, they can't apply a high degree of certainty to that revenue, and therefore it puts project financing in question. The second aspect of it, though, is actually the larger, from a macro perspective, the total supply of credits. So if Alberta does essentially, if everybody starts to decarbonize very quickly, they're going to be generating more credits, which thus increasing supply. And if demand is not growing, the price falls.
The price goes, yeah.
And so, at its core, there's a way to there's a way to address that, and we've done some research around this as well, which talks about what's called increasing stringency, the amount of emissions that are covered, thereby kind of growing demand as well as you're growing supply, and creating certainty in that price. And so the challenge is that we're somewhat victims of our own success, in that we want to see rapid decarbonization, which is critical to ensure that Alberta can compete in the global market that is decarbonizing, as well as to address the emergency of climate change. But if we do not also address that demand side, we actually risk basically making it incredibly challenging for these projects to move forward, because they don't have certainty on the revenue side. And so how do you essentially advance both of those together in a way that supports the market, but also meets those emissions reduction targets?
So how do we then create more certainty in the market? Like, what are our policy mechanisms to do that?
So this is really where it gets interesting. How do we create certainty in the market, ensure that firms internalize this cost related to emissions reduction, that taxpayers aren't on the hook for this as well, and all these different pieces kind of come together, and this is where the idea of carbon contracts for difference really kind of came from. They are used in other parts of the world successfully already. They're very similar to, they're kind of like an insurance. I describe it as like crop insurance, but crop insurance if Mother Nature took out crop insurance.
Yeah.
The reason being is what a carbon contract for difference is a government entity. It can actually, government takes out strikes an agreement with a producer of carbon credits and says, we will guarantee that your carbon credit will be worth X at a certain time in the future. And it could also be a range, or it could be a specific strike price. And if it is if it is worth more than what we agree to, then you owe us, the government, money in terms of the difference. Or if it is less than the price, then we will pay you. And so that is essentially, it allows the project proponent to say, okay, we know we will have a guaranteed revenue stream moving forward, and so therefore it makes sense for us to do it. In terms of simple numbers, let's say that government was to take on a project and say, we in 2030 the carbon price is set to be $170 per ton. So we expect that the carbon credits are going to trade for, let's say, $150, because the carbon credit would always trade for less than what the headline price is, most likely, because otherwise you would just pay the headline, you just pay that price as a feedback to government. So let's say it's $150. So it's $150 in 2030. If I produce carbon credits and they're worth 151, well, then I owe $1 to government. If they are 149, the government owes me $1. And so this could, when we start talking about this, the amount of tons, this could start to seem like, wow, this is a big potential bill for government. The issue is, though, or sorry, the trick is actually that government has a dramatic impact on that carbon credit market, because they can set the stringency rate, or the amount of emissions that are covered, and therefore the amount of demand.
So they can raise or lower that benchmark or that threshold of like what it would, whatever firms have to kind of reach or stay under.
Exactly. Not the price, but in terms of the amount of emissions that fall into that price. And so why that's important is, let's say that we have an issue in the future. So government, let's say there's a carbon contracts for difference that have been set up, and they're all set at 150, and government's looking at a big potential bill because they're all selling at 145. Well, government can actually increase the demand, therefore the value of those carbon credits, by increasing the total stringency, or the amount of emissions that are covered. And so because of that, if designed correctly, carbon contracts for difference should not actually cost taxpayers any money, aside from just the general management of setting up these contracts, which can happen within existing companies, or sorry, within existing departments and agencies. And so this is very similar actually to the idea of like the bond market in the UK, for example, or the bond market, for example. We recently saw in the UK when the government started to issue a significant amount of debt or they had plans to issue a significant amount of debt without revenue. We saw this, oversupply essentially coming into the bond market, and the Bank of England then had to make a promise to say, we will buy these up. We will ensure that demand is there such that we don't see a crash in the bond market. Now, this obviously is, that would have costs, whereas a contract for difference would not. But it's the same kind of concept of being able to impact the demand side of the equation.
We've seen a little bit of movement on carbon contracts for difference. We did see it. The federal government did commit to producing or exploring kind of what a program might look like. And at the end of last year, we actually saw a contract signed. So can you tell us a little bit more about how this program has progressed and what has happened kind of since over the last year or so?
Yeah, it's been an incredibly exciting time. We've gone from initial kind of conversations around what a carbon contract for difference program could look like, to it being announced in budget, to it all of a sudden, we're seeing kind of our first one just squeaked in just before Christmas, because I think they wanted to sign their first one by the end of 2023. So they just they had a buzzer beater.
We need a W for the annual report is what they're really looking for.
Exactly. So we saw Entropy, which is an Alberta company, carbon capture and storage company, with some really great advanced tech, got the first carbon contract for difference, or variation, a form of that, from the Canada Growth Fund, which is managed by PSP, or Public Sector Pensions. And essentially, there was both an investment into Entropy through the Strategic Innovation Fund, as well as essentially an offtake agreement where they were able to guarantee a certain strike price for a certain number of carbon credits, which was able to essentially ensure that Entropy could move forward with one of their core projects on carbon capture and storage. And so the way they've gone through with that is not exactly the way that we're talking about CCFDs, but they've got a first one that's out there, and then is really serving to reinforce the tier market and the belief that these carbon credits will not only retain value but increase in value.
Right.
What we've really been calling for is for them to look at more of a broad-based standardized program. So we would like to see a situation in which there's actually, that any firm that wants to be producing carbon credits can have a carbon contract for difference, with the federal or the provincial government, or together perhaps, like, if depending on how they want to design that program. But essentially that anybody can come in and it's a standardized contract that guarantees the value of the credits. Because really, when we talk about that uncertainty for investors, at its core, it's the stroke of the pen risk is what they call it, in which the carbon price is a government policy or regulation that, yes, it has some legislative backing to it, but essentially could, if a federal government so chose, or a provincial government so chose, they could adjust that. They could change that pretty significantly. And so the ability to have that carbon contract for difference really just ensures it's a way for the government to say to the investor, we're not going to be making dramatic changes in this space. You can continue to move forward and pursue this project that's really important, to the country and to the province.
So let's say we get all of these little pieces right. We get this policy and other policies. If we get the policy environment just right, what does Alberta, and I think by extension Canada, stand to gain out of that?
So that's a great question, because that's, at the end of the day, incentivization is how we're going to be able to move forward. Canada has really taken the stick approach, whereas the United States has taken the carrot. We see carbon contracts for difference enabling the stick of tier and carbon pricing to actually become an incentivization, to become kind of a variation, maybe a GMO carrot. I don't know what we want to call it, but a different type of carrot, because it covers that operational side and in terms of concerns for the investor. And what it would do is it would essentially, because of things like pore space, because of our amazing traditional oil and gas sector, because of the know-how and the labor force that we have here, and the strength of our firms, Alberta's incredibly well positioned to really step into a role as a global diversified energy powerhouse. And if we can create the certainty in tier, and we can ensure that people see Alberta as the place to make those low carbon investments, we'll see not only economic growth, like things, for example, the Dow investment that we saw in the Heartland, or Heidelberg up in here in Edmonton. We'll be able to see these sort of investments that bring jobs. Not only will that happen, we'll also start to develop that kind of new form of low carbon energy that allows us to export that technology to the rest of the world, that lets us license and sell different forms, or that knowledge that allows us to essentially do what we did for traditional energy, for more higher carbon forms of energy, but to do it for low carbon. And that really is the opportunity here, is essentially to build off of our strengths, use not just the natural geography, but our human geography that exists here, and be able to, use, if we can create that policy certainty, be able to set it up such that Alberta can help, maybe not win the generational clean energy arms race, but certainly be a really strong participant in it, which I think will be critical to our long-term economic growth.
So the flip side of that question is, what do we stand to lose if we can't move fast enough?
It's a tricky question, because you don't want to sound like Chicken Little when you answer it. But at the same time, the reality is that these decisions about where this investment is taking place and where global hydrogen production is going to take place, where ammonia is going to take place, where these technologies are going to be developed, are being decided right now. And if Alberta is not in a position to be able to capture that investment, it will impact us for at least the next generation, because those decisions and those products that we will be competing against, and or possibly be buying and using ourselves, essentially will be set up in different jurisdictions. And so we have an opportunity right now to stay at least with the game, if not ahead of the game. But if we don't make the right policy decisions today, it will make significant impact kind of moving forward, because we do know that while the demand for traditional oil and gas again will continue to grow, will exist for a long time. If we do not decarbonize it, it will become increasingly uncompetitive. And so how do we be able to use this moment to walk and chew gum, to advance both the economy and the environment, to do these things together, which has kind of been the way that Alberta has always done it. We've always been able to do these things, but we first have to start with the belief that we can, and the understanding of what the positive impact will be.
Yeah. I think that's a great place to end on a note of action and momentum. Thank you very much for joining us on Alberta Better. We really appreciate you sharing your wisdom and knowledge with us.
Well, thank you for the opportunity, and thank you really for all the work that you guys do at BCA. I mean, it's really important that we have we have your voice, and that we have these stories being told, because it's government. I spent a lot of time in my life working in government. Government needs ideas. That's really important, and they need policy ideas as well as a deeper understanding of what's actually happening. So the stories that you're telling and the work that you're doing is incredibly important.
Thank you for tuning into this special episode of The Brief. You can read Adam Sweet's paper in its entirety at definethedecade.com. We will be releasing new episodes in this series periodically, so make sure that you are subscribed to Alberta Better on Apple Podcasts, Spotify, or wherever else you get your podcasts to be among the first to access new episodes. Thanks for listening, and we'll see you next time.